Jay, I'm back with the best lender in the business, Bryant Williams with Cadence Bank, and we want to go over a few more topics that we think are important for you. A part of these YouTube videos, we really just want to have something where you can reference for questions. If you don't want to pick up the phone or schedule a call with us, which you should because they're at no cost. But we wanted to touch base on something that really affects a large amount of people, which is our self-employed borrowers. So Brian's going to give us a little information on what that means, what a loan could look like for someone that is self-employed, and things that you may need, because I think that a lot of people may not know what they need. I may get a little personal in this in saying that a lot of us entrepreneurs don't often show all of our income, and that could be a no-no. So Brian's going to talk more to us about that.
Correct. Well, thank you. So you said something that was, I think, is very important. A lot of people don't really understand that they're self-employed or what self-employed means, because they figure, hey, you know what? I'm not the owner of this company, so I'm not self-employed. However, if you're 1099, we look at you as self-employed. Okay. Some people do not get that. And another thing is, so when I'm talking to people in this video, if you fall in either one of these categories, we're talking to you. Okay. That's if you own your own business. Okay. You file your taxes and you file as a sole proprietor, whatever. Okay. You own your own business. You're self-employed. If you are 1099, meaning you work for another company, however, you're responsible for your own taxes, you're considered self-employed. The other is you can be W-2 working for a company. However, say you work for a car dealership, okay, but you're not on the sales floor, but you're in the
service department.
Thank you.
Yeah.
You're in the service department and you make commission, okay? Since you have it's called adjustable income. Since you have adjustable income, guess how we're gonna look at you? Self-employed. So those are the things that if you fall in one of those categories, this video is for you. It's perfect timing. You were meant to watch this.
I have a question for you. So as a self-employed entrepreneur, how long do you have to be doing that specific job before you would qualify for a loan?
So out of all three of those categories, you have to be in that business for 2 years consecutively. Okay. Now, I will tell you, some people will tell you that you have to have 2 years tax returns. FHA guideline says you have to have 2 years in the field.
So even if you hadn't filed your taxes, as long as you've been on that job for 2 years, it's fine.
Well, you would have to have your taxes.
Oh, okay.
Like so when I say that, I say that because what some people I've seen happen is I've gotten phone calls and people say, hey, well, they told me I just needed 2 years tax return. So meaning that the first year they could have been in that field for 6 months and then they filed their taxes. So they have a tax return.
Okay.
Okay. And then, but it's only for 6 months.
Okay.
And then they have the last year was a full year. So they're like, oh yeah, you know what? No, I have my 2 years tax return.
Right. Okay. Yeah. Now I got it. So so that makes a lot of sense. So you must be on that job 2 years. Even if you started working at the end of October, you're going to get a 1099 January, but you've only got in 3 months. So that doesn't count. So that's good. So 2 years is the standard for self-employed. Are there any different documentation that a self-employed person may need when going for a loan?
Yes. So the things that you have to be careful of is if you're going for a loan and if you're 1099, it's pretty much standard, right? 1099, we're going off the income that's reported on the 1099. Mm-hmm. And then we're going off, we're going to ask you for your tax returns as well. However, because with the 1099, we can see what you paid taxes on,
right?
Which is fine. if you're self-employed, whether you're claiming sole prop or LLC,
Mm-hmm.
we're gonna look and see, are you taking dividends, or are you just paying yourself out the company,
Mm-hmm.
or are you just using the income from the company, your AGI? Now, what you need to understand, your gross sales is not your income. That's a misconception that a lot of people think. They're like, hey, no, my business, I made $160,000 a year. Well, yeah, good for you, congratulations. However, what you paid taxes on was $36,000 a year. So guess what your income is going to be? The $36,000 a year, and people don't understand that. And then it's not, you can't, so also you can't go back to your accountant and say, hey, you know what, I'm gonna buy a house next year. So instead of me writing everything off like I did last year, I wanna go ahead and I wanna pay taxes on everything, so it looks like I made $80,000 this year. Which is fine, good move.
But
However,
what's the thing with that?
it's gonna be a we're gonna do an average of both years.
Oh, okay.
So you're 80,000, you just paid 30, you're 80 from this year and you're 30 from last year, you're probably gonna get 55,000 as your gross